Welcome to the Nichols Tax Update Podcast, issue 21-26 for June 28, 2021. This program is produced to provide current information about developments in United States tax law, cases, rulings, IRS pronouncements, and expert comments on hot topics. You are receiving it as a member benefit from the South Carolina Association of CPAs. My commentary is necessarily brief, and you should consult appropriate authority before taking a position on any item discussed in the program. I always acknowledge the value in preparation of this program of my subscription to Tax Notes Today, published by tax analysts, in my opinion, the preeminent source of information for tax professionals. Let's see what we've got. It was a busy week. 7 subjects. A Christian group is challenging the Internal Revenue Service. That'll be an interesting battle. And we're looking forward to automated filing of the Form 2848 coming soon. The IRS has revised the Audit Technique Guide on non-qualified deferred compensation, and disclosure of ownership is going to be required for many organizations as of January 1, 2022, and renewed on an annual basis. The IRS is giving us more online tools. These for the child tax credit. 2 tools, each to help make sure that those who qualify for the child tax credit actually claim it and get it. Next, the IRS is finally going to formalize the use of frequently asked questions. Not a moment too soon, in my opinion. We'll talk about that briefly. Finally, a taxpayer tries but fails to get reporting of qualified real property business indebtedness forgiveness and loss on the sale of related real property in the correct amount and in the correct year. You'd think that somebody would have looked a few things up, and he tried. We'll talk about how he tried, but let's take the first item first. There is the Christian battle flag. This from an article in Tax Notes Today by Fred Stokel on the 22nd. A group wants exempt status. Their purpose is to encourage Christians to become involved in civic affairs and to promote Christian principles. The IRS has written them a letter explaining that Christian principles are too closely aligned with Republican positions, so the political possibilities will not allow 501c3 status. The conservative, of course, see a liberal political influence in that IRS response. The first problem that I see is this outfit doesn't qualify for 501c3. They're going to be involved in civic affairs. They're going to promote good citizenship. They're a 501c4, but they don't want to be a 501c4. Why would they want to be a 501c3? So the contributions they get would be tax deductible by the contributors. That's not true for a 501c4. So I think the Christian group has asked for the wrong tax exempt status. I think they should be entitled to it if their purpose is to encourage responsible citizenship. In my view, responsible citizenship and thoughtful citizenship doesn't have a religious overtone. I know there are those who try to make it so, but I don't believe that's the case. I think a responsible citizen is a responsible citizen. A Christian is a Christian. Those two may, in fact, exist in the same Christian or in the same voter, but not necessarily so. Wow. Change coming to the filing of a Form 2848 in July. There's the form. What's going to happen? The IRS explained in a webinar on June 17th, and they gave a 27-page slideshow. The IRS Communications and Liaison Office briefed tax professionals about the new online accounts that will allow tax professionals to electronically submit authorization requests, access records, make payment plans, and manage notifications for their individual taxpayer clients. Initially, no business accounts here, but you will need to set up a Tax Pro account. You can access the IRS instructions here at that link, and you can look for them. Here's the first slide in the slideshow. You can look for those at irs.gov. Non-qualified deferred comp audit guide has been revised. There is a little clip from what the cover of the audit guide looks like. It's publication number 5528, revised on June 21st. We got news of it on the 22nd. So the IRS has simply revised the guide for their auditors on how they're going to treat examinations of deferred amounts, what the rules are for deferrals and employment taxes, and the employment rules for when income taxes should be paid and are due, when Social Security or FICA tax is due and must be paid, and the same for federal unemployment tax. The hassle here has always been that non-qualified deferred compensation should be treated as paid in the year it is earned. If so, then it will be subject to Social Security and federal unemployment tax in that year, but it will not be subject to federal withholding. It will be subject to income tax in the year that restrictions lapse. But the reason that you want to treat that compensation as paid is so that when you actually pay it, it won't be subject to Social Security tax in the year that it's actually paid. It was subject to Social Security in the year that it was accrued. FinCEN gets to know who you are. The Corporate Transparency Act, in case you missed it, which was passed on January 1st, 2021, gave the Treasury until January 2022 to start enforcement requiring disclosure of the beneficial ownership of any entity, with some exceptions. Companies with more than 20 employees, more than $5 million in revenue, and all three, a physical presence in the United States, are accepted from that requirement. Now you got to meet all three: more than 20 employees, more than $5 million in revenue, and a physical presence in the United States. So most of your seeking ID numbers, tax ID numbers, for new enterprises, you're going to have to register and disclose the name and the Social Security number of the organizer or the person that's in control, the beneficial owner. That's an individual who directly or indirectly, through any arrangement at all, exercises substantial control or owns at least 25% of the entity. The Corporate Transparency Act requires companies in the U.S. to file that report, provide the name, date of birth, current address, and the unique identification number, either from a passport or a driver's license, for the company's beneficial owners to the FinCEN. This information is updated every year to reflect any changes. This is what the SS4 is going to look like. I added the large black X's at line 7A. That's the line we're talking about. You must, when you're filing it for an ID number, you must disclose the name of the responsible party, and you must disclose a unique identifying number. Online tools for the child tax credit. Information release 2021-130, 2 new online tools to help families manage and monitor the advanced monthly payments of child tax credits under the American Rescue Plan. First, the Advanced Child Tax Credit Eligibility Assistant. That's a series of questions to determine if you qualify for the advanced credit. Then, a Child Tax Credit Update Portal. That's a secure, password-protected portal that allows verification of eligibility and gives you a chance to opt out of installment payments if you want the entire credit as a refund when you file your tax return. The IRS is going to formalize frequently asked questions. Not a moment too soon. This we pick up from a New York University School of Professional Studies broadcast on June the 24th. FAQs are going to focus on substantive issues, interpretations of new legislation, rather than procedural questions. and they will be accompanied by a system for archiving FAQs and tracking changes, which is really a welcome development. Taxpayers who rely on frequently asked questions in good faith can demonstrate reasonable cause by that reliance, sufficient to negate penalties, including for negligence under Section 6662. Meanwhile, before that system is in place, I urge all of you, make a copy of any frequently asked question you rely on and date it to prove your reliance on that FAQ, which was the best guidance you could get on that date. It may change tomorrow, but you relied on it on this day, and the IRS has said that you can rely on that in good faith. Well, here's it. Boy, we get to the end of these all too soon, right? A complex transaction involving forgiveness of qualified real property business indebtedness and a monumental fail. Richard Hussey had a transaction he knew was exceedingly complex. He tried to file his return, he filed it, and then he was concerned that maybe he'd made a mistake. And so on the advice of his financial advisor, he went to a CPA with 30 years experience to help him report the sale of some properties in 2012 and in a short sale. So he sold the properties in a short sale. The bank forgave some of his real property business indebtedness with respect to those properties. The next year, in 2013, he sold some more properties, and there was a settlement of debt, which the bank entered a charge-off on its books. I want to make sure we all have the facts straight. Okay, go to 2012. Richard Hussey sells property, and he gets a concession from the bank on his qualified real property business indebtedness. The hotshot CPA he hired read code section 1017A. And so don't worry, Richard. Your basis doesn't have to be decreased for the debt forgiveness until next year. You can for 2012, you don't have gain which would pick up the debt forgiveness. And so they filed the return. But this hotshot CPA forgot to read the whole code section. And if I've said this once, I've said it 100 times in this program. Read the whole thing. 1017B, 3F, 3 little a says that if you sell the property that is the subject of the qualified real property business indebtedness in the year you get the debt forgiveness, you reduce basis in that year, not the subsequent year. And so Richard had a tax deficiency. Then the CPA thought he had income from discharge of indebtedness, but he didn't, because the bank didn't send a 1099-C. And they didn't send a 1099-C because the bank knew that simply charging the debt off on their books was not an identifiable event. You got to have an identifiable event before you have income from forgiveness of indebtedness. The good news is, while Mr. Hussey had to pay tax, he did not have to pay any penalties because he had relied on professional advice. Thank you. Thank you for joining me. Stay safe. We need everybody to get through this together.